Alright, you guys, so this is for real beginner status, but maybe you'll learn a little bit of something new, even if you've done this stuff before. So you can go over to the bls.gov, and then you just click on the tab for CPI data, and it will show you some basics, right? And if you come right here, the consumer price index in August was up 0.1. Now the market expected it to decline, so more videos about that later. And so this was a huge surprise. So 67 of the 70 top economists in the world, the analyst for JP Morgan, the analyst for Bank of America, all the big players, they all anticipated this number coming down, and so the market priced that in, right? That's why you've seen this little bit of a rally. Okay, so when you look at this, I want to point out one thing that's super important. You have all of these items increasing. All items are up, okay? And what no one really pointed out is that at the same time, everything went up, which forced this number up, okay? So all items went up. That's how you got here. Now, if we go over to gas, in the same month, gas came down by 10%. Okay, so gas, in the past, people would look at this and go, well, inflation is high because of gas cost, right? I'm trying to make it real basic and common sense for you. So everybody out there in the public, well, inflation's high because of gas, because they can understand it costs more to move stuff around. They're paying more, all of that, okay? But we have gas prices coming down by 10%. So my question to you is, with it coming up 1%, with gas prices coming down 9%, what happens if gas prices move up again? Okay? Something to think about. Now, if you go over to this gas chart and we go over to the crude futures, I want to show you something. Okay? So what's important about this is that each time, see, what you're told, the reason charts are good is because the news won't report what's really happening. Hold on, my dog's barking. So I get my news from the charts, right? And it was sometime in June. I've said this before. I think it was this day in June. Maybe it was this day in June. Yeah. It was a 10% sell-off. Yeah, somewhere around there. Yeah. So this day in June was the day I called for early recession, and you saw the market react to that, right? Now, what the news doesn't tell you is that this decline in gas price that you've seen is twofold. One is demand destruction. People are driving less. Even though the prices have come down, people are driving less. They took less vacations. But that's a small factor in this equation, but you have to factor that in. If you go back to the chart and you were to go look up China lockdown, because if you don't know, China continues to lock people down for the coronavirus. So each time you see a leg down here, one of these big candles, if we went back to this time period, somewhere in here, you're going to see China locked down. Because when China locks down, that slows down everything, right? That's just less people driving in China, but it slows down manufacturing and everything. So two things can happen here, depending on your point of view. China can continue to lock people down, which will drive our gas prices lower, but then have other tertiary effects in the market. But if China were to come back online completely and gas prices even move it up slightly, let's say gas prices only move up to where they were a month ago. Okay, back to that 9.71. What do you think is going to happen to this number? Look at how big the market reacts to a 0.1%. So anyway, I just want to point that out because no one's talking about it. And I kind of put these puzzle pieces together on my own and think about things independently. And I just look at the charts. I'm not worried about I'll look at the chart, I'll look at this bar, and I'll say, okay, now I'll go find the news. Well, on this day, this was demand destruction. You know, on this day, I'll see that bar and I'll go, okay, what happened? Well, China locked down. You know what I'm saying? So, in conclusion, the thing to look for, right, if you're trying to anticipate the Fed rate hikes and all this stuff, I'm telling you now that unless the price of gas has to break lower. It has to come back down. And you see this resistance here? So gas would have to break lower and keep coming down in order for that CPI number to come down. If you want to know what's going to happen with the next rate hike before people do, then you watch this. And if this starts to move up, then you're going to have another CPI come in high, and the market's going to continue to freak out. And so that's that, guys. Something to keep an eye on, and keep on keeping on.